Hey everyone, thanks for joining us today. Sorry we're just a couple minutes late here. My name is Mike Marshall. I am on the product and sales team over here at Benzinga. I'm sitting here with Mr. Brent Slava. Brent, what do you do here?
I do a lot of things, but the main thing that I do is watch all the news. I'm one of the guys that's helping run the news desk, and I'm watching 20 different wires at any given moment, basically trying to digest a lot of information coming in. I want to weed out the stuff that traders like yourselves out there don't need, and I want to only give you the most kind of like pertinent information at any given moment.
So would you almost say you remove a lot of the noise of the market and try and just deliver the news?
Absolutely. So in your Benzing Pro platform, there's sort of like two ways you can get news. You can get aggregated, curated news. That's where we're looking at a ton of other sources. We're looking at social media. We're looking at other sources, Dow Jones, Reuters, Bloomberg, that kind of thing. They have a ton of news that's going on throughout the day. We want to condense that down and only give you like the most notable news items. The other way that we get you news is by doing organic reporting. So we're out there trying to unlock new information. We're trying to break news. We're trying to get you guys the most important stuff.
Excellent. And so today we're going to kind of do a little bit of a education session on how to research a stock.
Pretty basic stuff. It's extremely important. It's probably one of the first spots that you want to start if you're looking to make your first trade or make your first investment or looking to just get a little bit more education. How to research a stock is going to be probably a top tool that you can utilize as far as like education goes.
Excellent. And just so you guys know, we would love to hear some questions. If you guys have any questions, feel free to drop them into the chat. And other than that, are you good with us getting started here, Brent?
So I just want to say real quick, we have done this webinar once before. If there are people in the audience who were tuned into that one, don't get deterred. We are going to kind of go about it a little bit differently. We're going to be staying a little less conceptual, and we're actually going to go into some specific examples for you. We're going to compare how you might do, like your own organic research on your own. We're going to have you go to the SEC website. We're going to have you go to the company page. And then we're going to kind of compare that to how you do it in Benzing Pro. And we're going to give you, like I said, we're going to give you some specific examples. If you guys like what we did with it and you do want to get a little bit more conceptual, you do want to get a little bit more into kind of like the nitty gritty of it, go back and watch that other video. You can watch all of these webinars online after the fact if you miss anything.
Absolutely. And just kind of a last note before we get started, this is just information for you guys. This is not meant for you guys to take action on any stocks, buy any stocks, or sell any stocks. Just information for you guys to put in your tool belt and use if you guys feel valuable.
It's all about that tool belt. I'm not certified in any way, any kind of like stock certification series, whatever. I don't have any of that, but I have been doing this new stuff for more than about 10 years now. So I feel like I got a pretty good handle on some quick ways that you can research some stuff. That's what we're going to talk about today.
Excellent. So why don't we go ahead and just get started here. First slide, correct?
First slide it is. So Mike's driving the computer here. He's kind of taking you through the slides. There's going to be a couple moments where we kind of like break away from this PowerPoint presentation. We're going to open up a website. We're going to open up the SEC website. We're going to try to go to a company's website and show you how you would have to do a lot of this research if you didn't have a tool like Benzing Pro. So let's get started. As you're understanding, as you're wanting to research maybe one of your first trades, or maybe you just want to get a little bit better at how you feel like you're doing research, I got 3 things that are going to get you started. They're going to get you a nice foundation, and you can sort of work and learn from there. And those 3 things are going to be, first, understanding the company that you're looking at itself. The main thing there is, let's say you do a thesis. You have this, thesis that you've been thinking about for a while. You're sort of doing your own research, maybe away from the stock market, and you uncover this cool little trend that you noticed. It's AI or something like that, artificial intelligence. Make sure that the companies you're researching are giving you the right exposure for the thesis that you want to play. Does that make sense, Mike?
Yeah, so basically kind of your gut feeling or your projection of what you want the stock to do it aligns with kind of the company vision and their growth patterns, correct?
Exactly, and we'll get into a couple ways that you can do that here in just a few minutes because it's one of the first slides. Second thing I think you can do when you're doing your research is to understand the sector that the stock or the company operates in. Third one.
Excellent. And yeah,
Yeah,
I believe there's what, 11 different sectors, and then they have some subsectors inside those sectors, correct?
Great point. So like an example of a sector is like consumer cyclical, consumer non-cyclical, healthcare. We know that within healthcare, there's like biotech, there's pharmaceuticals, there's therapeutics. So that's kind of like, you sort of call the broader thing a sector, you call the sort of more specific industry.
Excellent.
And that's a really good point. Moving on to the third thing here really quickly, one thing you need to do as you're thinking about one of your first investments or trade is understanding recent price action. I think that does it for right about now. Let's keep it going, Mike.
Excellent. Moving on to the next slide here. Understanding the company first.
Yep, very important. All right, so again, kind of highlighting here in the, if everyone's watching the slideshow presentation, kind of highlighting again, will you be getting the right exposure for the companies that you're looking at? How do you learn about a company? There's more than a few ways to do it. I want to give you some tips on ways that at least I do some of my research. So you can first go to a company website. You're going to get a ton of information there. The one thing I would kind of warn you about is obviously a company wants to promote its product. So if you go to a company website, you're going to see a lot of product offerings. Maybe that will help you get a little bit of information. Maybe you need a little bit of information that is more specific to an investor class. And I would recommend going to a company's investor relations page if you want to see that. Also, press releases. This is a top way that I get a lot of my news throughout the day. So Benzing.com, our sort of front-facing article, full-length article focused website, we publish maybe 60 to 70 articles a day. Benzing Pro, which is our real-time breaking news platform, is publishing more than a few hundred headlines a day. So you're getting a ton more information on Benzing Pro. I'm posting a lot of the headlines that are going to Benzing Pro, and I would say like 60 to 65% of the headlines that we post on Benzing Pro are probably coming from information that we're finding in either press releases or SEC filings. So this isn't, like rocket science that we're talking about. This is the stuff that we're doing. You guys can do it too. You just have to get your hands on, a quick way to navigate around a press release, some quick tips on how you can navigate around SEC filings. And I want to actually do that for you guys. We'll kind of take you through it in just a second here. Press releases. So real quick, go back one more sec, Mike. So press releases, in a press release, you're going to get a range of news items. You can get earnings reports in press releases. You can get news of an increase or decrease, dividend, buyback news, M&A news, legal news, pretty much any kind of news item that might be material to a stock, that might move a stock. You're probably going to find out about it in a press release or an SEC filing. So why don't we take a little break here, Mike, and let's actually go over to, we'll just pick kind of like a random site. Mike's pulling up a browser window here. We'll just kind of go to a random site. Let's just try Apple. Go to apple.com. Let's see. So what I want everyone to notice here is we're going to try to do some like organic entry to finding research on Apple. We're going to do it here for you, and then we're going to jump over to Benzing Pro, and we're going to show you how much quicker it was to find some of this information. So Mike, pretty logical guy here. He goes to apple.com. He's going, I'm looking for press releases. He goes up to the search window there, and he types in press releases. What are you getting here, Mike? Does this look like anything meaningful to you?
Looks almost like promotional stuff.
I don't really know what this is.
Yeah.
It's not press releases. I can tell you that much.
Not on accessories. We don't really care. So let's see. Maybe news. Let's try news.
This is. I mean, I haven't practiced this. We're like
search ads.
We're like seeing this. You guys are seeing this live.
Okay, so I think this is actually.
So let's see if we can find a press release on here. Keep going, Mike. Keep going on that page. Scroll down there. I want to see if there's press releases at the bottom or something. I don't see any. Yeah, maybe down here. So they're like an investor relations. You see that investors. That'll get us to press releases here. Okay, so look, there's your third quarter earnings results. You can see the 10Q. You can see the press release. Do we got any other press releases on here? Why don't you click? So there's like your actual press release. We'll go through this in a sec. I'll give you some tips on a couple ways you can get news really quick. Try that newsroom one. Maybe that'll get us to some more press releases. Let's see. Okay, so these look like press releases. These are the press releases that hit. You can see the timestamps there. Highlights Apple's keynote event. What did you say, David?
Yes.
Cool. Hey, so now, Mike, sorry about that, ladies and gentlemen. So, Mike, let's jump over to Benzing Pro. We're going to show you how we can get to Apple press releases a hell of a lot quicker than we just did right there.
So two ways that we can do it. One would be we can click on this newsfeed icon. One way, I know that the default page to details right over here, I'll give you a couple zooms so everyone can see.
That's better.
Is the default to details is going to be Apple, so I knew they would be right here.
Nice.
Select press releases and.
So look, go back, click over to the Apple newsroom, Mike. Click on this tab right here. Click on that second tab, this one. So look, scroll up to the top. So look, these are the press releases in order. Look, iOS 11 is available tomorrow. The future is here. iPhone X, iPhone 8, and iPhone 8 Plus. The next one, the last one. Actually, not the last one. Apple Watch series, Apple TV 4K. Now let's go back to Benzing Pro. There's all your same press releases that we just seen right there, and that took, that took like a couple minutes shorter, right?
Exactly. Yeah.
So now that is the very most basic functionality of finding press releases on Benzing Pro. This is like the stock package.
Excellent.
There's a ton of cool stuff we can do with Benzing Pro platform though. So Benzing Pro in this iteration has been around for a couple years now. We had another edition of Benzing Pro before this one, and you couldn't do a very key aspect of something that I love on the new Benzing Pro, which is keyword searching. So you can do keyword searching on Benzing Pro now, and you can use keyword searching, you can use ticker searching also, but let's talk about keywords right now. You can use keyword searches for the headlines that the Benzing News team is typing out themselves and putting to this feed. You can do keyword search for that. The really, really impactful part, in my opinion, is you can also do keyword searches on press releases and SEC filings. So Mike, why don't you show the audience how to turn on press releases and SEC filings in your newsfeed?
Excellent. So I just closed down the details page. Right here I have a full news feed.
These are all Benzing headlines, just to note.
Yep, absolutely. So the source that this information is coming from is either the Benzinga wire or Benzinga signals. And if I wanted a little more information to come through my news feed, I can come over here to press releases and SEC filings.
Yep.
And
so just turn off Benzing signals also, just because I don't feel like having, and sorry, Benzing wire also. I don't feel like having the noise in there right now.
Excellent.
So hit done.
And we see here what the source is. So whether it is coming from the SEC directly or a different press release company.
Perfect. So now, Mike, I want you to do Apple. Type in ticker Apple, AAPL. We're going to only see Apple press releases here. This is awesome.
Or
right?
SEC as well.
Or SEC, excuse me. Yep, exactly. So how about we do this? Let's compound a little bit of searching on top of that ticker search that you're using. Why don't you try to do a keyword
launch?
Delayed launch. That's not what I was thinking, but let's try it. Let's see. I don't know if there was going to be a press release or an SEC filing, but this has been a huge topic of Apple right now, as far as, maybe their iPhones are going to be coming out a little later than expected. That was some talk that was, catching headlines over the last couple weeks. And so look, you found something in a Form 10 filing from August 2nd that did include delayed launch. Let me try to do another search here, Mike. So why don't you just try? Let's maybe back up one step. Just try iPhone. Just do keyword iPhone. So
remove Apple?
Nope, keep Apple. So we're going to compound. Not only are we seeing press releases and SEC filings, we're only seeing Apple press releases or SEC filings, and now we're only seeing press releases or SEC filings that have Apple and the keyword iPhone in it. And you can see that your options get a lot more limited. So very, very, very basic example we're giving here, Apple iPhone. You can use this keyword searching for like whatever your little heart desires. You can get super creative with this. One that I really like is to do a ticker plus the 10Q. So just try that real quick. Try 10-Q. Get rid of iPhone there actually, and then just type in 10-Q. And we're going to see all of Apple's 10Qs right here. Really easy to see, really easy to get to.
You could almost even go Q1 if you wanted to see the Q1s, correct?
I don't know if like the taxonomy in the SEC filings is that way, but you're thinking in the right direction. You're getting creative with it. It's a great idea. So,
I
got any questions?
A couple of hands are going up.
Let's see if we got questions. That's good.
If you guys have the ability to drop in a chat, we cannot send you guys messages directly unless you guys ask the questions. So if your hand is raised, just shoot in a question into the chat, and we are sending out a message right here, or right now, so you guys all know where the chat function is.
Nice.
All right, moving forward.
Sure. So let's just try to do one more thing right here while we're on the topic of like understanding a little bit more about the company. I want to take a quick dive into an Apple earnings press release. I want to just give a couple tips on how you can get a little bit more information about a company from the press release. So get rid of that there. Why don't you try to do earnings, see what we can find, see if it gives us the right press release that we're looking for here. Let's show here. I see it. Oh, I've seen it. Dang it. So it's actually all the way down the bottom of the feed. I think it was like August 1st. So what I want you to do here, Mike, is to double click on that Apple reports third quarter results. And what the double click does is it popped open this press release. It's in its own window. So the best kind of quickest tip I could give you for looking at earnings press releases, it's probably the press release kind, the press release type that you're going to use the most is your earnings report. The best thing that I can tell you to do is scroll down to the bottom of the press release right away, right when you get a press release. If you're looking to try to find information very quickly, scroll down to the bottom of the press release. You're looking for the income statement here. So I think you might have went a little past it, Mike. Keep going up there. Keep going up. Where did our income statement go? Keep going up one more. Here it is. Here's our income statement. So look at this. Right away, very easy to see. Look, there's a sales number. 45.4 billion in sales. The company reported last quarter. That was compared to 42.4 billion the same quarter last year. Earnings were $1.63. Will you highlight there with your mouse real quick, Mike? $1.67 was the earnings per share figure. That compared to $1.42. So Apple grew its earnings, what is that, 18 cents or so? Did I do that math right? 15 cents over this quarter, over this year. Super basic stuff here, ladies and gentlemen, but just want to show you a couple quick tips on how you can get some cool information out of a press release.
Excellent.
Sweet.
Thank you.
No problem.
All right, should we jump back to the...
Let's do it. Yep. All right, so finding out how the market is valuing the company. This is something very important. After you've learned what the company does, after you've learned what regions the company operates in, you know, like what kind of segments the company provides, you want to start understanding how the market is valuing all those things. Were you going to ask a question?
Nope. Gary, we're going to show you guys how to do that. Before you get off, can you search upgrades and downgrades for Apple stock price?
So maybe we won't demonstrate it. I'll just tell you right now, Gary, you can go try it on your own after the webinar ends. So type in ticker AAPL in your Benzing Pro feed, news feed. Click on and Mike's pulling it up right here. Click on the categories button. So Mike has just clicked on the categories button. These are all the kinds of news items that might hit Apple. M&A, offerings, ETFs, dividends. Analyst ratings was the one that you're looking for there. So click that, Mike, hit done, and you're going to be shown, oh, you know what, I think we got our press releases. There you go. So turn on Benzing Wire. Here's all of the analyst-related headlines that Benzing Pro has published over, you know, Right now, we're looking at just a few days of analyst-related stuff. If you want to see, you can also use the calendar for this. And Mike just clicked open to our calendar suite. He's going to type in ticker Apple, and he's going to change the kind of calendar we're looking at. We were looking at the earnings calendar. Now we're looking at the the analyst ratings calendar, and you can see all of the recent analyst action that has hit shares of Apple recently.
And you see the analyst right here. You see the analyst right here, and then the firm as well.
Yep.
And then all of their ratings,
recommendations, the price targets, etc.
Yep, exactly.
Really good question, Gary, and definitely want to welcome more questions like that. So get them in while they're hot. All right, let's jump back to the PowerPoint real quick. There we go. Okay, so the first way that I want everyone out there to start considering a stock as they're looking at it for a potential investment is think about the market cap. Is this a massive company like Apple, a mega cap company? Is this a large cap company? Let's say it's, over $20 billion in market capitalization. Going down the list, small to medium cap is between, I think like 10 billion and down to $2 billion. Micro cap is when you're getting under $1 billion to about 300 or 350 million in market cap. Nano cap is where you're below 350 million. Really quick kind of primer on market cap, earnings and sales. We showed you on Apple, really quick way within like a matter of seconds, how you can find your most recent sales figure, your most recent earning figure, and how those numbers compare on a year-over-year basis to show you how much the company is growing their earnings or sales. These are things that you absolutely need to know about a company as you consider it. So now we're starting to get into stuff that's a little bit more advanced. So PE ratio, that stands for price to earnings ratio. And what the price to earnings ratio is a ratio on how the market is valuing that company's earnings. So the most like technical, practical, logistical way that you can describe price to earnings ratio is the multiple, the times over that the market is willing to pay for a company's $1 of earnings. So let's do a quick example right here. So GM right now has the lowest PE ratio of any S&P 500 company. It's sitting at about 6 times multiple. So what that means, like very realistically, very practically, is that the market participants are willing to pay $6 in order to get $1 of GM earnings back per year. So I gave you one quick example there. GM, Apple, we've been talking about Apple a bunch. Apple's PE is about 17. So let me say it again, just to say it again. Market participants are willing to pay $17 to get just $1 in Apple earnings returned to them at the end of the year through like the company actually earning money, like earnings per share. Now, Apple and GM are considered technically to be value stocks. They're considered to be value stocks because they have a price to earnings multiple that is under 20 times. When you start working your PE ratio over 20 times, meaning the market is willing to pay more and more for just $1 of earnings, that's where you get into what's considered a growth company or a growth stock. So I'm sure everyone's heard value versus growth. That is directly derived from the price to earnings ratio. And just to give you a quick example, Amazon. Amazon's PE right now is about 244. Market participants are willing to pay $244 to get just $1 back in earnings. Why do you think that is, Mike?
Because they're going to be printing money soon.
It's all about growth. It's all about the prospects. It's all about future earnings. People are so convicted in Amazon's growth right now that they are willing to pay $200+ to get $1 in earnings right now because they feel that in 5 to 10 years, the company is going to be just so dominant that, this would have been viewed as a time when Amazon shares were relatively cheap, if you can believe that, at an over $1,000 company.
Yeah, it's crazy.
Okay, do we get a question here? Cindy, really good question. She asked, what does a negative PE mean? She's saying International Game Tech has a PE of about -42. Well, Cindy, that means that the company isn't making money. I was going to say making money yet. It might not be that they're not. It might be that they have made money. They're just not making money anymore. So it's actually a negative times that the market is willing to pay for their growth, for their earnings. They don't have earnings, so it's a negative number. Really, really good question.
It would, and I guess on like an institutional side, would that be something where they would have trouble getting involved in a stock that has a negative PE ratio like that?
It's just about the riskiness, I would say. So as your PE goes up, you're going to be appealing to investors who are more willing to take on risk. As your PE goes lower, you're talking about investors who are more risk averse. They don't want to take on risk. They want to have this value play that will grow slowly. There's not a ton of growth. Maybe they pay a dividend. Quick way to describe it. Really good question there, Cindy. Thanks a lot. Let's keep going here on a couple of important ratios. So your PEG ratio, it's your price to earnings growth ratio. Your price to earnings growth ratio is the multiple, the value that the market is willing to pay up to get earnings growth. So we looked at Apple's earnings per share. We saw that Apple's earnings were up, what was it, 15 cents, Mike?
Yep.
So we could do the math on that, and we could figure out what the percentage of their earnings growth was and put that over the market price right now, and we can determine how many times market participants are willing to pay to get a percentage of earnings growth. I gave you a couple examples on PE. I'm not going to give you quick examples on this one. However, I will tell you, just like I told you, a PE between 10 and 20 is considered value, 10 or lower, and up to 20 is value. Over 20 is growth. What's acceptable for a PEG ratio is if you get to your PEG ratio, which is about over 2 times, you're getting into the land of growth. You're getting into the land of where certain market participants will be starting to think that the stock is looking a little expensive. Current ratio, let's keep going. Current ratio it derives from the balance sheet. It is the company's current assets over their current liabilities. You get to this ratio. If that ratio is positive, it means that the company has more cash, more assets than they do debt. You want to get a company, especially if it's one of your first investments, you probably want to look to a company that has a pretty strong balance sheet. You probably want to look to a company that has a current ratio over 1. That means that they have a lot more cash and liquid assets than they do debt and obligations. Last one on the slide, and this is kind of like probably our longer slide here, ladies and gentlemen, so stick with us here for another minute or so.
And Mr. Chris Serhan, make sure you're paying attention to this one.
Okay, got a special shout out for one of our audience listeners, dividend yield. So what is dividend yield? Dividend yield is the percentage, the company's dividend that is being paid over its current price. So let me see if I can give you a quick example here. So let's say that a company pays a dividend of a quarterly dividend of 25 cents per quarter. That means they're going to be paying $1 in dividends per year. If that company is currently trading at $10, so 1 divided by 10, that's 10% yield. So the yield is the amount of money that the company is willing to pay out versus its current stock price. If a company pays a 25-cent quarterly dividend, they pay a $1 annual dividend, and the stock is $100, their dividend yield is 1%. That's an all right dividend. 10%, the first example that I gave you, that would be a very fat dividend. If you're getting to a dividend yield that's about 3% or so, that's where some of those value companies come into play. That's where, like a GE of the world, their dividend is probably around 3% or so. And generally, value stocks, value companies are going to have higher dividends and higher dividend yields. Quick little kind of like back of the envelope tip I can give you.
Great. Anything else on this slide?
I don't think so. Let's keep it rolling.
Great. Understanding the sectors and how they operate and how the company operates in them.
All right, cool. So why understanding the sector, why understanding a company's close competitors is important is because you might want to know which company in the sector is the best. If you have heard, listeners, if you've heard of a saying called best of breed, it's a sort of like stock market idiom where it's describing the best player in a space. You know, like let's take a quick example. First Solar is considered by a lot to be the best in breed play in the solar market. They're the company that is really like pushing the envelope in solar. They have their margins down to a T. They're widening up their margins, that kind of thing. Maybe best of breed isn't your play. Maybe you don't want to have the best in breed play. Maybe you think that best in breed play is oversaturated. Everyone knows it's the best in breed play, so you don't want exposure to that. And you decide, you know, like, hey, maybe this third player in the space has some pretty attractive valuations, has some pretty attractive business segments. Maybe you're going for something like that. Also, something to note, what's called a sympathy play or a peer play. So real quick example of what a sympathy play is, very basic example that I like to give is like the toy market. You know, Toys R Us went bankrupt earlier this week or last week, I can't remember right now. Hasbro and Mattel are two toy makers. They're really the only two toy makers, publicly traded toy makers that are left still. So when Toys R Us news hit, you know, one of the big toys retailers out there is going to be going bankrupt, could have some implications for Hasbro or Mattel. Those stocks did go down. The other kind of like quick way I can describe that is, you know, let's say Hasbro has earnings. They're just blockbuster earnings. The stock goes up $20. You better believe that Mattel is probably going to move higher also. It's what's called read-through. And it's sort of like an indication, well, if Hasbro's doing really well, maybe we can determine that Mattel's doing a lot of the same stuff, and they're probably also going to have really good results. Or we can at least get to this point where we go, okay, Hasbro is doing really good. However, Mattel hasn't done these things that have been very important for Hasbro, and so maybe Mattel shares move in the opposite direction. Really quick description of peer play or sympathy play.
Great. Moving on.
Alrighty.
Understanding recent price action.
All right, cool. So a couple important things, and I'm just going to read off the slides right here. Recent price action is a function of expectations being adjusted by the market. Those expectations are set by the sell side. And what is the sell side? The sell side is the opposite of the buy side, which is like hedge funds, firms out there that are buying stock. Sell side is those research arms that are attached to some of the big banks like Bank of America or Goldman Sachs or JP Morgan. And what's happening is they are doing a ton of research. They have these, you know, advanced models. They're going to stores. They're doing channel checks. They're making these models. They're putting earnings expectations, and basically that's what the market pushes off when, like, for example, we get an earnings report. You'll hear, you know, Apple reported $1 and the estimate was for 95 cents. They just beat the analyst expectations by 5 cents. Probably likely that the stock could move higher on that. Also, momentum is something that's important when you're thinking about price action. Momentum dictates that a company has to continue to beat estimates for the momentum to continue. So I just gave you that example in Apple. I said they beat by 5 cents. You'll probably hear a time, though, when Apple didn't beat by enough. If Apple has beat, you know, 10 quarters in a row, they got to keep beating those estimates in order for the stock to go higher. If they only beat by a penny or two, even though they beat analyst estimates, maybe the street wanted more and the street is going to punish that company or that stock because they didn't beat by enough. Volume. Volume is extremely important to be thinking about as you're considering an investment. You want to know what kind of liquidity a stock has. If a stock doesn't trade a ton of shares per day, if, you know, a stock only trades 50,000 shares per day, there could be a moment in your investment cycle where you want to get out of a stock. You're like, oh my gosh, I don't like this stock anymore. I want to sell, and there's no buyers out there of the shares that you're selling. That's why liquidity is extremely important. That's also why, you know, like high frequency traders and algorithmic trading, it's important because it brings a ton of liquidity to the market. Generally, I could tell you that if you are looking at a stock that has about over 100,000 shares traded per day on average, you're probably not going to have to worry about ever not being able to get out of that stock. 100,000 shares per day, that probably is getting you enough liquidity that you can sell at any time, sell or buy at any time. Something also important to consider in volume is it gives you a quick gauge of the current day interest in a company. So like the example would be, Bank of America can trade 1 billion shares on a given day for whatever reason. Let's say that one day you go and you want to trade Bank of America, you notice that we're halfway through a trading session and there's already been 5 billion shares of Bank of America that have traded. That means that there is just a massive amount of interest in Bank of America shares today. Maybe you don't know why. Maybe it doesn't matter to you why. But the important thing is that it gets you started on your road to researching to understand why people are so interested in Bank of America on that one day.
Excellent. And I'm just going to quickly pull up here how we can find that information on Pro.
Yeah.
Anytime you see a ticker symbol on Pro, you can just click it with your mouse and it's going to bring you to the details page.
And close that one over there.
Yep. Yeah. And right over here is where you're going to find all the information, all that data that Brent just broke down for us here. So,
your PE, your current ratio.
Everything.
Your market cap in there.
And then the session volume.
24 million shares of Apple have traded today.
And then over the past 100 days, about 27
million over the course of the entire session, which we still have 3 hours more left in today's trading session. So for whatever reason, it seems like a ton of people are trading Apple. It's being some kind of investment trading vehicle today. The one really quick thing I want to note over here, Mike, is just kind of like mouse over these things right here. So what these industry percentage is indicating is a comparison versus the industry. Apple is an $847 billion company. That is at the very high end of the tech industry. So we're showing you like a full green bar to indicate that out of the tech industry, Apple is right at the top. The other, we see a red bar here for revenue growth. That's because it's missing there. How about for PE forward? So what you're seeing here is Apple's forward PE is about 17.5 times. The industry average for tech is almost 40. So Apple, compared to the industry, is kind of like a pretty good degree under that industry average.
And when you're putting together these theses, are you thinking about, though, that, the tech sector, usually you have a company that all of a sudden just gets discovered and then blows up, does really good for those first couple of years. Is that what could almost be bringing this number up?
Yep, really good assumption there.
So making sure that you guys are taking into account the sector itself, being in a tech sector, I understand that there's just rapid growth. So this might not be that bad of a number since Apple's been around for so long.
Absolutely. Yep, I would definitely agree with that.
Great. Getting back to the PowerPoint.
I think there's only like one more slide. I just wanted to touch on something that's getting a little bit more advanced. This is still like really basic stuff, but from where we started researching a company, this is sort of getting on the more advanced side of things. Technicals. Technicals is a show of behavior in the marketplace on a chart. So when you look at a chart of Apple or you look at a chart of Amazon, when you're noticing trends, when you're noticing tendencies in a stock price to move away or toward a level, you're considering technical areas of resistance and support. So like, for example here, just this is a really basic chart. It'll get you what you need to do. You can click over to this little chart function here. Mike's doing it on screen right now, and you can see a little bit more advanced charting. You can put some, you can put some trends on here. You can put some channels. There's a ton of, Bollinger Bands. You can put relative strength on here. Why don't you just click back to the chart really quick? I'll just give you a really, really, really quick example of some resistance and support. So this area between May and June right here. So everyone, look at your screen right now. I'm kind of highlighting this area right here. This area right here would be considered a level of resistance. The bulls in the name tried to bring the stock over, what was this level? It looks like maybe the 154 level. They had some tough time there trying to get the stock over 154. So the price kind of stalled at 154. And look what happened when the bulls couldn't bring it over 154 consistently. It started selling and it fell to a resistance area around 145, or let's call it like 142.5 if we want to get specific. And so look, the stock kind of traded in this range here between 142 and like 154 or so. And, you know, following through, look what happened after the stock moved over 154. It kept going higher, and now we're right back at this level where it looks like technicians in the name are sort of dealing with this technical resistance and support level around 154.
Great.
So real quick, the first part of the PowerPoint, I was giving you, ways to find a lot of fundamental information. Why I wanted to bring the technicals into this presentation is because it's a really good idea, in my opinion, to combine fundamental information, stuff about the operations, stuff specific to a company, and combine that with the market perception, which you can see in a chart. And maybe what you do is you have, a strong fundamental case for why you want to buy shares of Apple, but maybe the chart isn't showing you the best time to buy. Maybe there's some important technicals that are in play that you notice, and you go, well, maybe right now the best thing that I could do is watch shares of Apple and see what happens at this 154 level. If the stock bounces off that 154 resistance level, maybe it means it could test that 165 level again, and you have this strong fundamental thesis to back that up. If the stock falls below 154 level, where we're at right now, maybe the stock will keep falling until it tests that prior support level at about like 142.50 or so. So kind of wanted to like wrap it up for you, wrap the presentation sort of into one little ball there for you with that last little tip.
Excellent. Brent, really appreciate you explaining all of that, breaking down a lot of the different terms and things that we should be thinking about when, either entering a stock or starting to get some trade ideas.
I hope it was helpful.
Appreciate all the listeners out there. Thanks for tuning in. If you guys do have any questions, send them to us. I believe some of the topics we got coming up, do you remember any of them off the top of your head?
What's the next one? The next one is gonna be how to buy and sell a stock. So we're trying to start at a basic foundation here, and we want to kind of take you up a couple levels. And after a couple of these webinars, we think you're gonna have a lot of good information to go start doing your own research, maybe thinking about buying or selling your first stock. Keep going from there.
Excellent. And anyone who is new to Pro or has not signed up to Pro, I believe you should be getting an email, or Andrew actually just dropped it into the chat. We have a big flash sale going on today.
Ooh, 20% off.
So take a look at that if you guys are interested.
What? It's 60%?
Sorry, Andrew over here is our numbers guy. He's just a little bad at numbers, so it's actually 60% off. Really appreciate all of you guys tuning in. Feel free to drop us a note, an email. We love to hear from you. Tell us what we could be doing better. Tell us what you guys want to learn about, and we'll happily go through it with you guys. So from Detroit, Michigan, signing off. Best of luck in the market.